trigger from vantage point from this true strength indicator, and we don't have it. So again, this suggests that the Euro US is going to continue to move down. We've closed the week in the 105.70 area. Now again, I think we're going to get a bounce up higher here, and as soon as it moves up higher, the market participants are just going to move in there and just put the shorts back in. So again, the bias remains to start the week on US Swiss franc, again, to the downside. New Zealand US dollar, very similar to the Aussie dollar. We can see that we've got a crossover here that's taken place to the upside. Everything looks good there for the New Zealand US dollar to continue its move up this week. We've closed the week out at 71.05. Our predicted moving average to start the week on our medium-term crossover comes in at 70.45. We'll probably see a little deeper pullback than that, but for now, we're definitely gaining strength. Our predicted true strength indicator is crossed to the upside. Predicted medium and long-term differences are now beginning to turn positive. So again, we're taking the triple EMA crossover out of it this week. We're using our medium-term crossover and a number of other indicators. Each week we like to mix this up just to show what's actually happening in the market and some of the different indicators. And again, New Zealand looks to be ready to continue its move higher. Now, brings me to the Euro US. We're going to spend a little more time with Euro US because this is such a popular currency pair. The medium-term crossover, as I suggested last Sunday, that the Euro US was going to move higher based on the US dollar index, Euro futures, a number of factors. Very nice move on that. So what we're going to do is with the Euro US, we're just going to take a little bit longer on this pair to go over it because I think it's worthy of that because, again, it's so heavily traded. Now, we're getting a little bit overbought here on our predicted true strength indicator. We're pulling back on Friday there, but again, I think you're just seeing profit taking. I think that this move is going to continue to move up. So now what we want to do is we just want to identify key areas to get into this. Now, our medium term is supportive of it continuing to move higher. So now let's go in and look at the short term and see what the short term is supportive of it continuing to move higher, or if we're going to get a corrective move. Well, it's basically running flat, but it still is not crossed over. That's supportive. Looking at our long-term crossover from vantage point, we can see here that, again, the long-term is actually a fairly fresh signal here on the upside. So again, there's no reason here for us to be selling Euro US at this particular time, in my respectful opinion. So what we're doing here now is we're going to put the triple EMA crossover up for a moment so everybody can see this. I'm going to clear this so everyone can again get a good look at this. Our 18-day predicted moving average comes in at 124.53, 125.60, and 126.47 with a close of 126.46. Only a sustained break of 124.53 will take the pressure off the top side. We have essentially a fresh crossover on this triple EMA crossover only about a week ago. We should see I'm expecting a move towards that 130 area this week. We've hit a high of the 127 area. US dollar index, there's no indication there that that's going to continue to that's not going to continue in its current path, which is lower. We've failed significantly in the 89 level. Minor corrective moves. This is what I'm warning everybody about, this intraday short-term indicators. You have to look at the bigger picture here, and the bigger picture here points to dollar weakness, crude oil strength, all of which are supportive of the euro. So with that said, let's actually take this one step further now with this euro. We're going to, like I said, we're going to spend a little bit more time because the euro is certainly a relevant factor in currency trading, and not just in currency trading, but the euro currency, its strength or weakness affects the commodities market, it affects the equity markets, a number of different things. So what I'm going to do here is I'm going to hit apply to all, and then what we're going to do is we're going to take the euro and we're going to put the euro up, the euro US currency pair, and we're just going to put it up here horizontally, and now I'm going to bring in the crude oil contract so everybody can see this. Now, I had talked extensively about this last week, and that I felt that either the crude oil contracts or the euro, one of them was a false break, and I made the call that, in my opinion, it was crude oil that was going to be the false break. So now we can see what's actually happening here. We can see that crude oil has actually done exactly what I suggested would happen. It based out just above the $70 range, and now it's moving aggressively higher. Now, this is, again, supportive of further euro strength. These are the kind of things we want to look at when we're trading. We want to be able to see very clearly what's happening in the market. We had a volatile session 2 weeks ago in the crude oil, but as I said, I felt that it was going to recover and we would see the dollar continue to weaken and the euro continue to strengthen. So if we take the US dollar index now and we put it directly up against the euro US futures contracts, we can see that there's essentially 100% correlation between the US dollar index and the euro US currency pair. Now if I put up the euro futures contracts, it's a very similar, it's almost identical to the euro US. So you can see how I'm using multiple markets to gauge this. Now the one factor is we also want to look at here is equities, euro US and equities. We can see that this correlation is now coming back. The 3-day has crossed over the 8-day and the 18-day predicted moving average. However, there was a bit of a lag this time, and the equity markets clearly lagged behind some of the other markets, which is interesting. But given a couple of days to work out that volatility, the equities are now starting to come around. We can see that if we take this, and what I'm going to do here just for a moment is I'm going to put up the medium-term crossover again. I'm going to hit apply to all, just so everybody can see this to help further illustrate this. Now, very interesting. The medium-term crossover on the euro took place here. A couple of days later, now we have a medium-term crossover on the S&P 500. So it's taken a few days longer, and clearly the S&P 500 has been somewhat lagging behind the US dollar weakness, the commodities and everything else. But the correlation, the point that's being made here is that the correlation is still there. Now, light sweet crude, again, we're just about ready to have the medium-term crossover to the upside. Very important that we can identify what's going on here. Now, just for a point of interest, another popular correlation that's been in the past is gold. So what's actually happening with gold? What direction is it likely to go in? Well, it's very interesting how normally these correlations are very similar to one another. You can see how the euro-US crossed to the downside, gold went up. Gold went up right here, crossed to the downside. Euro continued to move lower. As the euro went up, so did the gold. But this time, gold is crossed to the downside and the euro is crossing to the upside. And it's a very clean break on both. So again, we're looking at all of these different markets. This is the basis of intermarket technical analysis and all of the different things we want to be mindful of that's going on in the market. But again, tipping this is the Forex weekly outlook, but even on my weekly trades, I always tip to the medium or long side of the trade, because the short-term intraday volatility, you have economic data, you have global equities bouncing all over the place. Short-term indicators, 50-point stops in Forex, it's just doesn't work in my opinion. This market does 50 pips in the morning before it even has its coffee, guys. So if we look at the daily range as identified by Vantage Point, if we've got a 100 pip range, realistically you should have at least a 100-point stop if you have a stop at all. That's only my opinion, because essentially if that's the range, if I've got a 100, 120 pip range and a 40-point stop, that math doesn't make a lot of sense to me, and it never has. Currencies are only moving 1% of their value per day, and it's very important that we don't lose sight of that. So that is a fairly detailed outlook of the Forex weekly outlook at the week ahead for July the 12th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.